Yes, it is Tuesday. And unfortunately, we wake up again with some senseless violence. I live in the city of Chicago, and we have plenty of it here, but in Manchester overnight, terrorist attack at a concert, kills 22. The markets initially pulled back a little bit, but were mixed overnight in Asia. And that's what we want to talk about here on MarketStream.live is the markets and what's going on in those markets, because that impacts your future. And so we want to touch on the overnight action and everything that occurred in Japan, China, Hong Kong, and India. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is MarketStream.live, and this is where you're going to get that full transparent look into the markets. We're going to give you context. And we use charts, and I'll use my unique technical analysis and fundamental analysis, utilizing also options to give us that perspective. And, today when we have headlines, what we see with the geopolitical, the terrorist attacks, it's just constant. It's almost overwhelming. So when we look at these pictures, we want to look at them from an analytical perspective. We want to basically just drill it down and make sure that when we hear things like, for example, Japan, the Nikkei down 65 points, that's down 0.33%. What does that mean to us? And really what it means to you is that about 10 to 25% of your portfolio could have exposure to Asia, and specifically some portion of that could have exposure to Japanese stocks. So when you hear that Japanese stocks are down overnight, that means that a portion of your portfolio, if you were long, well, that could be an impact on your portfolio. That may mean that your portfolio is adjusting a little bit and maybe negatively impact. And the significance of that move, that's what we try to put in context. So when you hear the Nikkei down 65 points, and then you say, well, it's trading above the 20 and 50-day moving average, that's giving you context. And what do I mean by context? Basically, that's telling you that currently right now, the longs, the bulls, the people that own stocks over the last 20 and 50 days, they're in control of the Japanese markets right now. They have not lost control. The downside is not the prominent trend. The upside is in Japan. Now it's challenging it at that 20-day moving average, which comes in at 19,508 on the Nikkei. So now that you have this context, you're going, okay, it's down, but we know that the prevalent trend, the trend right now is to the upside, and it is in the bullish hands. Now, what has been driving this market to the upside has been the Japanese currency, the yen. And the yen continued to drop up until this week and late last week. We saw that it actually popped, and you see that the yen's performance is now above the 20 and 50-day moving average. That's going to put a little pressure on the Japanese markets. A stronger currency means that companies that export or produce goods that they export could be under pressure because their now goods and so forth are costing more for foreign buyers. Now, with that being said, we'll watch that pair. And the pair that we're going to watch is the US dollar over the Japanese yen. If that starts to strengthen, if you start to see that get up into the 113, 114 level, that's going to put pressure on the Japanese markets. Also, what's interesting that came out of Japan is that Finance Minister Aso came out and said that he's going to talk up free trade at the G7 meeting that's coming up in Italy. So this will be very interesting to see how those discussions go. Turning to Shanghai, we want to look at China. China, whether you're looking at the Shanghai Composite, which has basically been trending in a downtrend. Why and how do I know it's in a downtrend? How do I know that the bears are in control? The market's been trading below its 20, 50, and 200-day moving average. That's telling me that the bears have been in control basically for the last month and a half to 2 months. Since the beginning of April, it's been on a downtrend. So for the last 2 months, this behemoth has been to the downside and grinding to the downside. It's not like it's had a precipitous drop and continues to. It's been a grind. One of the major reasons why is because the government, specifically the People's Bank of China, as well as the regulators, are starting to tighten up both capital requirements and leverage capabilities. So you're seeing that things like materials, things like housing, and other factors are starting to become under pressure. You also saw utilities and telecom names in China overnight under pressure. So with the Chinese markets down 0.45%, that's good for 13 points to the downside. We continue to see that the bears right now are in control in China. But one thing that you'll note here is that they're basing. You're seeing that they're starting to get a consolidation. A challenge of the 20-day moving average means short-term bulls could be gaining some momentum. Watch the data. Watch to see this break above on the Shanghai Composite. That could be a good sign that bulls are getting back into stocks, getting back into the markets, and that could be positive if you're looking for or adding to or already have exposure into the Chinese markets. Taking a look at Hong Kong and the Hang Seng, this has held up quite nicely. It's basically up 11 points, but you can see that it's been in an opposite trend in the mainland. It's been trending to the upside, most notably because of finance and because of the gaming names. Galaxy Sands, you have Wynn Macau, casino names have been performing very well, especially since there hasn't been any restrictions on as far as money flow. As a matter of fact, you're seeing an interesting discussion too. Alibaba is about to get potential approval of the purchase of MoneyGram. Watch that very closely. That's an interesting purchase. We'll see if that approval is finally finished, but that's been something that market watchers have been watching. But Hong Kong has been trending to the upside, and EWH is an ETF that you can take a look at that tracks the Hong Kong market. Sensex, India. This is one of the stronger indices in Asia. It's been consolidating right now at this level of right around 30,300, 30,600. It's been in a very tight range, and you're seeing that it's churning up here. You saw that majority of the sectors in the Indian markets were under pressure overnight. We continue to see just that broad-based weakness, but it hasn't challenged and broken through its 20-day moving average. So the bulls are still in control in the short, intermediate, and long term in India, but it looks like it's getting a little tired. Let's watch the Indian markets. If you have exposure there, or if you have an ETF that has exposure there, that could start weighing on the performance of that ETF. All right, folks, that's it for the overnight action report for Asia. I'm going to be back at 8:45 Eastern, 7:45 Central Time. I'm going to be talking about everything that's happening in Europe. Let's see how the European markets are reacting, not only to this terrorist attack, but they've also had some economic data for the Eurozone, and there's more discussion on whether or not the Greeks are going to get that tranche of financial bailout from the ECB. So join us. See you then.